how can I lower my tax bill? If that isn't an appropriate question right now, I don't know what is.
That's a question I get a lot
Mhm.
of. I get it all the time. So I was thinking about this coming in here today, and there's some of the obvious ones out there, like contribute more to your traditional account. So I wanted to think of a few, I'll call them more out of the box ideas that you don't see, too often. So I have three of them. Number one would be, for folks who are closer to retirement, is this concept called tax gain harvesting. You've heard of that, correct?
Yep.
So, I know we've heard a lot of tax loss harvesting, but this is almost looking at it from a different point of view. So the reason that you would do this is because, if you have a brokerage account in a non-retirement account, and, if you actually make under a certain amount of money, if your taxable income is low enough, I have the numbers right here just so I didn't screw them up, just because it changes every year.
Yep.
So if you file your taxes jointly, if you're married, $98,901 for 2026, and then if you're single, it's $49,451. So basically what that means is if your taxable income's under that, you can actually sell gains in a brokerage account and pay 0% capital gains tax. So this can be done strategically at different times. Maybe if you're in a lower income year, you're early in retirement, and there could be a lot of good side effects to this. So the tax gain is, hey, we're going to sell this on purpose to almost accept the gain because we know we're going to be in a 0% tax bracket, even though we're in a brokerage account, which a lot of times people just think, hey, tax-free coming out of a Roth, that's really it. But this is another opportunity. And we see a lot of people with, a good chunk of balance in those brokerage accounts. So, that's one of the ones I wanted to go over. And, it's taxable income. So you would actually, you could make a lot more because you'd have your standard deduction that comes off, which is a little over 30 or 16, depending. So, you could make about 130,000 effectively married. And it'd be about 80,000 or so single. You take your standard deduction off, and that would get you below those numbers, and you could pay 0% on capital gains.
Interesting. So that's one. Did you say there were three?
I have three.
Okay, keep going.
All right. So the other thing is for Social Security. For people who are in retirement, you could take more of your income from Social Security because in theory it's taxed less than if you pull it right from your IRA. The most Social Security can be taxed is up to 85% of the benefit. Doesn't mean you pay 85% tax rate on it. That's one of the misconceptions I see. But up to 85% of your benefit could be taxed, and it could be lower than that. And they have this different formula for how they arrive at that. So $1,000 of Social Security income, you would actually pay less tax on if you took $1,000 out of your IRA in many cases. So, getting income from Social Security actually could be a way to save taxes, and that could play a role in, when you actually take it. So that was another thing. And then the last piece was strategically doing Roth conversions. A lot of times this presents itself for people who are in early retirement. Where they have this, we work with a lot of, mid to late career people, a lot of folks who are making good income, and you go from, maybe you're in the, 24, 32% plus tax bracket. And then early in retirement, you're in a really low tax bracket. We have some people who are in 10, 12%, so that could be a really good opportunity to, take money from the IRA on purpose, kind of fill up the lower tax bracket buckets. Because you can do that up to a certain point, and then pay 12% instead of waiting until maybe you have RMDs that you're forced to take out at these much higher brackets. So you could pay less taxes now. You move it into a Roth where you obviously don't have to worry about taxes ever again, which is saving you taxes in and of itself. But then down the line, if you have less money in those pre-tax IRAs, that actually could lower your required distributions too, and kind of have that type of impact. So those are the three things I would say, people could do to help their tax bracket, aside from, some of the, mainstream stuff out there. Yeah.
So I have a quick follow-up.
Yeah.
If I have a huge deduction in a given year and I do a Roth, should I convert everything and put it all into Bitcoin?
Probably not. You could.